There is big news in the world of precious metals, more specifically, the world's largest precious metals company. I'll explain exactly what it is as we explore. There are some companies that were a lot smaller back in the day. Amark Precious Metals was one of those when it was kind of at the peak of its popularity in terms of the products it was offering as a precious metals refiner dealer back in 1965. But it was the 80s that saw us a flurry of Amark products out there in the form of rounds and bars. And if you have any of those, you probably likely do if you've seen them in the what are known as generic junk piles of silver that you see, or I like to refer to as privately issued. They do have a brand on them, Amark Precious Metals. They're a lot bigger than that now. Who would have thought that company out of California would grow to be the size that they are now? But this news coming across the wires is pretty amazing what's going on and how they very well could enrich themselves and become even bigger based off of this incentive that they're now offering. The board of directors of Amark Precious Metals, a leading fully integrated precious metals platform, has authorized an increase in the number of shares which may be repurchased under the company's existing share repurchase program and extend the expiration date of the program from June 30th of 2023 to June 30th of 2028. Under the revised program, Amark is authorized to repurchase up to 1 million shares of its outstanding common stock, in addition to the 335,735 shares repurchased under the program as of March 31st of this year. The increased authorization underscores the strength of our fully integrated platform and the board's confidence in our ability to continue investing for the long term while opportunistically creating shareholder value through our repurchase program, according to Greg Roberts, who is Amark's CEO. Now, what does this mean? What does it mean by a repurchase program? Some of you may remember the repurchase fiasco, which was another repos that were done to the Federal Reserve that injected a lot of liquidity into the banking sector back in 2019, heading into the pandemic. That was a bad thing, but this is actually a very good thing for shareholders. A share buyback is a form of a shareholder remuneration where companies buy back their own shares to reduce their capital by canceling the repurchased stock. While the number of shares in circulation falls, shareholders' stake in the company and the amount they are due from future dividends increases. So it's a way to bring value overall to the company, and the shareholders will benefit, but the company benefits as well too. This is from Santander.com that describes some of this. So under the regular market conditions, share buybacks can have the following benefits. The company's value remains the same, but the supply of the shares is lower. The share price will in general tend to increase. However, that depends on market behavior. When the share price is lower than the tangible net asset value, which is known as a TNAV per share, the buyback will cause the latter to increase since there will be fewer shares in circulation once the repurchased shares have been canceled. Second, the earnings per share increase due to the reduction in outstanding shares. Shareholders will have a greater share of the company's profits, which in turn make the share price more appealing to investors. Sounds like a win-win situation, doesn't it? And thirdly, shareholders who don't sell their shares during the buyback don't make a cash return and therefore don't have to pay any tax. Share buybacks enable companies to generate additional shareholder value under regular market conditions. The portion of the profits that a company uses to buy back shares has a positive effect on the share prices, which means they are setting themselves up to be an even more profitable company, and they've set themselves up in a position to be able to make that happen and to increase that shareholding. Now, the press release continues. The actual number of shares repurchased and the timing of repurchases will be determined by management and will depend on a number of factors, including stock price, trading volume, general market conditions, working capital requirements, and other factors. The stock repurchase program may be modified, suspended, or terminated at any time. Repurchases of shares under the program may be made through open market purchases or privately negotiated transactions, including repurchase plans to satisfy the conditions of a couple of rules from the Securities Exchange Act of 1934. Now, this is happening for the largest precious metals company in the world, and that means that they could only become even bigger as an account this and more profitable. And I tell you what, they're becoming a behemoth right now. In fact, I just did a video not too long ago where I got it completely wrong. I thought that they were shrinking in terms of their shares of Atkinson's coins there in the United Kingdom. It turns out that they closed on a deal to become bigger interest in the company. So they are just growing again. And usually this is what happens. So I was kind of shocked and surprised that it would be the other way, but I misread that. Now, again, if you don't know or not familiar with Amark Precious Metals, they were founded in 1965. They are saying that they are a leading fully integrated precious metals platform, but they are the leading integrated precious metals platform that offers an array of gold, silver, platinum, copper, palladium, numismatic coins, and related products. And they conduct its operations through 3 complementary segments: wholesale sales, ancillary services, direct-to-consumer, and secured lending. So they're involved in the supply chains. The company's global customer base spans sovereign and private mints, manufacturers and fabricators, refiners and dealers, financial institutions, industrial users, investors, collectors, e-commerce customers, and other retail customers. So they are involved in a lot of it in a lot of different countries. Now, that being the case, that means that the prices that they charge on the point of sale means that they are responsible for more of that price than any other precious metal company out there, because they are involved in so many efforts through the supply chain. You would think that would mean that they could make processes more efficient and become cheaper, but it also means that since they have their hands in so many different companies, such as, for instance, Silvertown Mint, Provident Metals, JM Bullion, Pinehurst, a whole bunch of other companies, Goldline, Silver.com, Cybermetals.com, BGASC, and others. Because they have their hands in all those companies, that means they are essentially becoming closer and closer to becoming the dominant player in the field. Maybe not an actual absolute monopoly, but the closest thing you can get to it. And so that means they can cut costs in some areas and weed out their competition. But they can also, once they do that or buy up the competition, then prices can go up. So there's something to be said. I kind of like working with some of the smaller companies to some extent as well too. It's just that this is a big company. I mean, apparently everything they're doing is legal so far, but they have minority ownership interest in additional direct-to-consumer brands, and we've talked about that in previous videos. And so they've got their hands in a lot of different areas in the sector, in the space for gold and silver. So interesting indeed. Now, what will this mean for the company? I think it means that their stock price is probably poised to probably go up in turn because of the things that have been happening and because of this repurchase program that you can just sell it back. And that's going to add value. Means that they are essentially insulating themselves from what other companies face in terms of their stock situation. We'll see. It certainly is an interesting development here. I've been reporting with videos on Amark Precious Metals and them in the news for quite a number of years now, and have covered the purchase of Provident Metals by JM Bullion, and then the sale of JM Bullion to Amark Precious Metals and these other bullion dealers, and through the course of my time on this channel. And most of this has occurred during my time in this space. So it's been interesting to watch this company grow by leaps and bounds. And the thing is you don't see any Amark, modern Amark products. Kind of don't need to. They can use their point of sale agencies like the BGASC, JM Bullion, Provident. They have their own branded bullion products out there. So it's pretty fascinating, pretty interesting indeed. And again, it doesn't necessarily mean it's all a bad thing. If you can find a good deal, I would say wherever you find the best deal, you should buy from. But there's something to be said for buying from smaller organizations as well, and independent organizations that may not be influenced, like especially from what I understand, BlackRock has an interest in Amark as well too. So there's that to consider as well too. Whenever a company gets too big as well, it has the propensity to become inefficient and become bureaucratized. And that's another thing that makes me a little bit fearful about the growth of Amark. But hey, we'll see how it all plays out. But nonetheless, let me know what your thoughts are in the comment section below. I thought this news was interesting and I wanted to pass it along and share it with you, my viewer. So I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.